Hey everyone, this is Rudy for Investor Investor, Mr. Oxy at your service. Yesterday, I made a short video on Q3 earnings expectations, but over the past few days, I've been digging a little deeper to see if I can find some reasons why people are saying you should sell Occidental or you should buy Occidental, and I'm trying to sort of arrive at an EPS estimate for Q3 and valuation on Occidental. So this one's going to be a little longer as a presentation, and if you're easily bored, you might want to skip a slide now and then and move forward. Especially if you're feeling bearish, you might want to stick with selling, and if you're feeling bullish, you may want to stick with the buy section, which I find much more interesting than the sell section. Anyway, here goes. Firstly, Yidi Zhang wrote me a note in the comments and said, could you do some calculations for the Q3 earnings that will hopefully show some positive EPS? So Yidi, I'm not actually going to do some calculations. Obviously, firstly, I don't have a crystal ball, and secondly, I don't want to mislead. I'd rather just share information. So what I did was I just mined a variety of different information sites to see if I can give you as much information as I could possibly find, including direct from Occidental Petroleum itself. So Neil Backhouse from Occidental wrote me an email, and he said in June and August, Occidental launched and subsequently upsized tender offers for senior notes expiring 2021 through to 2023. Together, these two upsized tender offers total approximately $5 billion. He continues, the refinancing undertaking will provide Oxy with more time to close divestitures and apply the proceeds towards debt reduction. This is an email to me from Neil Backhouse from Occidental Petroleum, so direct from the horse's mouth, and this is sort of an update related to the debt note tender offer. All right, so what we have is a couple of slides that actually show why you should consider selling Oxy. So this information is not information from me, it's information retrieved from a variety of different websites and just compiled into one presentation for you. So the first thing that they mention here is Oxy's total debt to capital ratio was 62.9% at the end of the second quarter. Now, everybody probably knows and appreciates the fact that Occidental is carrying a large amount of debt. This debt to capital ratio is actually not that extraordinary in the energy sector right now, based on a variety of factors, including the pandemic and the oil price crash in the second quarter. The other thing that they mention is Occidental's long-term debt. At the end of Q2 was 36.7 billion, which was down from about 39.4 billion at the end of 2019. So Oxy has managed to basically knock a dent in their debt load of around $2.5 to $3 billion through the first 6 months of this year. And then they add that during the upcoming period 2021-22, Oxy will have to repay debt worth 11.1 billion. Of course, that's also subject to the debt note tender offer. So we'll have to see what that looks like on a go-forward basis. Right now, Oxy actually has either cash equivalents or otherwise access to financing available to meet its debt obligations relatively comfortably. Second slide, the reasons why you should be considering selling Oxy. Oxy's Q2 cash equivalents was 1.1 billion versus a current debt load of 2.9 billion. Now we know that's already changed significantly, but we're going to hold that for now because that was matter of fact as at the end of the second quarter. Everybody knows that Berkshire's $10 billion investment, the cash investment in exchange for preferred shares, added a significant and substantial portion to Occidental's debt post-acquisition. The past 12 months, the shares, Occidental shares, have declined 71% versus the industry of around 43%. So Oxy took a much larger hit in terms of the share price. Um, I'm not too sure. You can you should add that as a reason why you should sell Oxy, but that's obviously debatable depending on your investment thesis. Another reason why you should consider selling Oxy is because Oxy is in a very highly competitive environment. There's intense competition from other oil and gas companies, state-owned foreign companies, etc. Obviously, I think it's fair to say that everybody is relatively aware of the fact that the oil and gas segment as a whole is very competitive for a variety of different reasons, both at a macro and a micro level. And then furthermore, we know that Oxy is exposed to the market price of commodities. We saw the effect of that in Q2. So that's also just stating fact, but not necessarily news. Another reason, or a couple of reasons why you should sell Oxy. Oxy faces cost overruns, development interruptions due to delays in drilling approvals, property border disputes, etc., etc. This is actually pretty much the same for any oil and gas company, so it's not Oxy related. But I think if you are considering selling Oxy because of this, then you probably shouldn't be invested in energy at all. But that's just my take on that particular statement. And similarly, operations are subject to federal, local laws and regulations, etc. That's true of all oil and gas companies. So if that's part of your thesis, then you should probably rethink whatever it is that you're investing in, especially when it comes to oil and gas or energy. How about reasons to buy Oxy? I think here we get more a little bit into the meat of the bone. So instead of having sort of a macro thesis in terms of things that Oxy cannot control, let's look at the elements of Oxy's performance that they can actually control. Firstly, the production from the Permian Basin grew 60% year over year to 465,000 barrel of oil equivalent per day. Obviously, that's also due to the acquisition of Anadarko. And Oxy's investment plans and production growth support cash flow generation capacity. We can see that in the numbers. We can also see that in the current production, which is highlighted here as well for us because this line over here says the combined company, so Occidental and Anadarko, have a production capacity of 1.3 million barrels of oil equivalent per day, which would be accretive to cash flow. They're actually currently running at about 1.4 million barrels per day. And of course, they're doing that in a market environment where the WTI price has been in the 40s. So yeah, it could definitely be accretive to free cash flow, but we're going to have to wait to see what happens there. Other reasons why you should consider buying. So I just mentioned this. The total production for 2020 is expected to be between 1.3 and 1.4 billion. I'm sorry, barrels of oil equivalent per day total. And then in addition to that, they've been busy doing a variety of different things, and these are some of the highlights reels. Occidental has the ability to quickly reduce activity in a low price environment. Conversely, they can ramp up production quite quickly when the opportunity arises. They have extraordinarily high quality assets in locations across the globe, and Oxy for sure is a low cost operator, which is one of the reasons why they previously were able to reward their shareholders so handsomely. Some more reasons why you should consider buying Oxy. We know that they've already divested of some core assets worth almost $2 billion to help them free up some cash so that they can help to settle their debt. Very recently, we know they made a divestiture to Orion Mines for about 1.3 billion. That transaction is expected to close this quarter, or maybe in the fourth quarter of 2020, so within the next couple of months. Oxy is planning to divest another $2 to $3 billion in the first half of 2021, and they have already achieved $1.1 billion in overhead and operational expense synergy ahead of schedule, and they've managed to achieve $1.2 billion in additional cost savings for 2020. So they've cut costs, they've cut operational and overhead costs, they've freed up some cash. These are all reasons why you probably would want to consider buying Oxy. While I state that and make that statement, I can share with you that I actually added to my position today at $12.65 per share. Yeah, I'm bullish on Oxy. More reasons why you should buy Oxy or consider buying Oxy. Oxy was previously a consistent dividend payer, but how about this? Oxy previously increased its dividend per share for 16 competitive years before they cut it twice, just very recently over the past few months. However, lowering the dividend twice reduced the dividend cost by nearly $2.8 billion annually. So as an investor in Oxy, the pain of having them cut the dividend actually frees up a lot of cash for them in terms of free cash flow to help them cover their debt expenditure. So even though I don't like the fact that they cut the dividends, I'm okay with the fact that they did it. Q2, we saw this in the earnings call with Vicky and the management team. Operating expenses cut below the guidance of $4.69 a barrel of oil equivalent, in addition to reducing capex by more than 50% to approximately $2.5 billion. An exceptionally good job by the management to address the situation that Oxy finds itself in right now. So let's move on to the valuation. This is from Zacks, so I'm giving them the credit here. This is not my calculation. I don't have a crystal ball. I don't want to take a chance, and I don't want to mislead any of my followers and subscribers and the people who are listening to me drone on and on and on about Oxy. But I care deeply about the company, and obviously as a long investor, I want to see them do well. We know that the shares are down almost 70%, trailing 12 months 71.3%, which is significantly underperforming the benchmarks and sub-industries in the oil and energy sector as a whole. Oxy is currently trading at about 1.87 times of trailing 12 months cash flow. Occidental, is undervalued, and I think we can all agree that Occidental is very cheap. Some people will say it's the shares are trading low for all the right reasons, and some will say it's trading low for all the wrong reasons. I'm not here to make that call. I've already told you just a minute ago that I've added to my position, so you kind of know where my sentiment lies. Zacks currently has a neutral recommendation on the stock, and the current, it's not so much a price target, but more the current price of around $13 reflects approximately 1.94, so 2 times of 12 months cash flow. In summary, just before I share a couple of graphs with you in terms of EPS and sales and revenue expectations for Q3, Oxy is maintaining the production base and lowering outstanding debts. They've lowered capex, they've lowered dividends. We talked about that, almost $2.8 billion in dividends, and they've identified many ways from an operational expenditure point of view to reduce the OPEX and CAPEX, etc. The Permian Basin is continuing to boost total production volumes. This is good news. They have managed to sell some non-core assets, and they plan to divest another $2 to $3 billion early in 2021. And we know that they've been underperforming the industry in the past 12 months. So it's kind of like an overview of where we're at. I would like to hear your comments in terms of what you're thinking. Are you thinking more time to sell or time to buy or do nothing? I mean, at the end of the day, those are your 3 options if you're long on Oxy, right? A couple of forward-looking graphs. We're looking here at the past history. The first little line on the graph shows you sales, and the second line on the graph shows you the earnings per share. And then we are currently in 2020. We'll have to see where it lands from an EPS point of view. And then this is sort of a quick view here in terms of what 2021 might look like in terms of sales, revenue, and EPS growth rates year over year. it's tough to call, right? It's a commodity-linked stock, and Yidi Zhang, as I mentioned right at the start of the presentation, this is one of the reasons why I don't want to be as bold as to make my own calculations. I'm going to rely here on people who are probably much smarter than what I am, which is not difficult to be. Let's look at the sales estimates. This comes from Zacks. So currently we're in 2020. So we have a reasonably good view to 2020 in general. We can see the sales estimates achieved for 2019 was 21 in millions of dollars, so that's 21 billion. We're estimating approximately 18, and again, the estimate from Zacks sort of matches the estimate for the full fiscal year of 2020 in terms of sales estimates. Now about the EPS. So we had positive EPS in 2019, and then we went negative after that. So if we look at 2020, obviously we already know what OXY achieved for the first 2 quarters of 2020. And then if we look at the expected for Q3, it looks a little better at negative 65 cents, and then for Q4, negative at 47 cents estimate for an annual of $3.33 negative. And then if we look forward into 2021, so if we look through the 4 quarters here, we have for 2021 an estimate of approximately negative 35 cents, negative 29 cents, then 21 cents, then 16 cents. So an improvement as we go, but obviously it also depends on the oil price as a commodity, and that's not something we can control at all. Occidental has great assets. The management is doing good work in terms of addressing the situation that they're in terms of managing the debt. We'll have to see where we go. As I've said a couple of times in this presentation, I am bullish on OXY. I think it's going to reward us in the longer term. So guys, that's a wrap for now. The comments will be interesting. I look forward to the interaction, and as you will know by now, I try and respond to as many comments as possible. At the very least, I'll just give you a like button if I like your comment. But if you ask a question, I'll try to answer it as best I can. So that's a wrap for today. I hope this helps you a little bit in terms of your own investment narrative. This is Rudy for Best Your Investor, Mr. Roxy, signing off. See you soon. Bye-bye.